In this video, I'm going to talk a little bit about some price action analysis in the 4-hour time frame of the euro dollar, remembering that all videos in the channel are for educational purposes only. So one of the first things you should do when you open a price chart is to look for major highs and lows, because that will help you begin the analysis in a more organized way, and it will facilitate the rest of the analysis as well. Sometimes that will be very easy, and sometimes that will be pretty challenging. In this chart, we can see the clear development of higher highs and higher lows, meaning that buyers have been controlling this market. When buyers produce higher highs, they don't let sellers produce lower lows. It's clear that the market is bullish. It's also important to know when to switch between a low resolution and more broad analysis to a high resolution and more specific analysis. For example, at this moment, we can see that there is a clear hybrid candle in this chart with fractal and buying pressure qualities. And if we look at a few candles back, we can see that there were similar candles around this area in price. From this piece of evidence, we can move on to the next abstraction, which is the horizontal frequency line that seems to be holding the lower tails of these candles I'm referring to. Notice that this level is a little above the usual upper and lower limits of a demand zone. This is a tricky situation, but it happens a lot, so it's important to keep an eye on these hidden frequency lines, because they might spark the next trend move without price ever going back to the supply and demand zone. Another detail to pay attention to in this chart is the fact that the hybrid candle I referred to a few moments back is producing a bullish continuation divergence in the relative strength index, which is when price action produces higher lows while the RSI produces lower lows. There's a second bullish continuation divergence happening in a broader sense when we analyze the current hybrid candle with the last solid major low. So far, we have three pieces of evidence lining up in the candle. We have the hybrid candle with fractal and buying pressure qualities touching a horizontal frequency line at the same time that this hybrid candle is generating two bullish continuation divergences in different degrees simultaneously. Beyond that, in the low resolution scheme of things in the chart, we have higher highs and higher lows being produced. All of these elements point to a bullish reversal at this point. Another tool we can add here is the Andrews pitchfork in the most prominent highs and lows of the chart. If we ground a pitchfork in these specific axes, we'll see that the center line of the standard fork will grab the lower tail of the hybrid candle we've been analyzing since the beginning. This refers to the fact that the Andrews pitchfork reveals the geometry between adjacent price vectors, and the center line in this configuration can be a level of reversal or a market edge. An even further detail here is that we can apply the other very common type of Andrews pitchfork, which is the modified shift fork. This pitchfork works exactly like the standard one, but the A-axis is grounded on the midpoint between the A-B segment. This reveals further lines of the geometry between adjacent price vectors that are not visible with the standard pitchfork. With the modified shift pitchfork, it's possible to see an upsloping lower line cutting through the lower tail of the hybrid candle we've been talking about since the beginning. As you can see, all pieces of evidence in this chart are converging to a singular point, which is the current hybrid candle. That doesn't necessarily mean that a long trade should be opened in this moment. We still need to look for good places to put a logical stop loss order. In this case, there are two alternatives. The most immediate action is to open a long trade at market with a stop below the tail of the hybrid candle. The reason for doing this is that there seems to be enough buying pressure at this lower tail to prevent a stop loss. But the problem with this entry is that it's not very precise, and precision is a key factor if you want to survive this game in the long term. The perhaps more appropriate action in this case would be to wait for a possible secondary entry at the intersection between the center line of the standard Andrews pitchfork and the lower line of the modified shift Andrews pitchfork. That's a suggestive place because if price comes back to that intersection, we'll have a better entry, and by using the same stop, we can increase the risk-reward ratio dramatically, therefore minimizing the risk and maximizing the reward on this trade, which is the overall goal of advanced speculation. So let's fast forward price a little bit to see what happens. As we can see here, price comes back right to the intersection between the center line of the standard Andrews pitchfork in the lower line of the modified shift Andrews pitchfork, and it does that perfectly 2 times. The trader can enter in this first touch of the intersection in a bolder move, or he can wait for the second touch and sometimes third or fourth touch in a more conservative manner. The logical stop-loss order is still below the lower tail of the large hybrid candle, as I said earlier. As we have discussed many times in this channel so far, the ideal risk-reward ratio for professional trading dwells somewhere between 1:3 and 1:5, and this guideline can serve for you to gauge your take-profit target. In this particular situation, there are 2 possibilities in the horizon. The most obvious of them is to place a take-profit target at the center line of the modified shift pitchfork, because that roughly correlates with the last major high, and that will give more or less a 1:3 risk-reward ratio. The other possibility is to wait for price action to develop further and start showing signs of reversal to the downside. This second alternative is riskier, of course, but it can end up yielding a higher return per unit of risk. Let's fast forward price a little bit more to see what happens. At this point, we can see that the more conservative take-profit target would be hit roughly in the area of the last major high, therefore providing more or less 1:3 risk-reward ratio. However, as price developed a little bit more now, the situation regarding the modified shift pitchfork has shifted a little bit. Price has produced a shift in the center line of the modified shift pitchfork, and as we can see in the RSI, reversal divergences started to appear between the major highs. One of the things we can theoretically do in a scenario like this is to draw the parallel line in the frequency shift and observe what price does if it reaches that area. Since we are already in divergent territory, which is a red flag about a possible reversal, this seems to be a good place to look for a precise reversal point and a higher risk-reward ratio in the original trade. Let's advance price a little bit more to see what happens. In this particular candle, several pieces of evidence converge once again. Notice that we are hitting a parallel line that was born out of a frequency shift in a modified shift pitchfork. Beyond that, price action is displaying a reversal divergence in the major highs for the second time, which increases the chances of a reversal a little bit more. And the final touch happens because there is a fractal candle piercing the parallel line with its upper tail. If you were still in that trade, this would be a perfect time to get out of it, given this ensemble of different reversal elements. This would give roughly a 1 to 5.5 risk-reward ratio in that original trade. Let's observe what price does next. Here we can see that the fractal candle in alignment with the other price action elements and the pitchfork would pinpoint to the accurate reversal and would optimize the take profit target of this trade from 1:3 to 1.5.5. If you want to learn these techniques and much more, check out my trading courses in the links available in the video description. If you want to learn more about this trading style, you can check several videos here on this channel. That's it for this video. If you enjoyed the material I create, please help support the channel by clicking the like button, subscribing to the channel, activating the notifications button, sharing the video, and leaving your feedback below in the comment section. Thank you very much for watching, and I hope to see you in the next videos. Take care.